Welcome back, fellow speculators, to the Speculator's Edge, where super performance begins and opportunities await. I'm your host, Berg. So today I'm going to show you how you can achieve super performance and achieve some massive gains with stocks ARLO, FINV, RVLV, and YTRA. Okay, so these stocks are breaking out according to my stopper method, and so anyway, I'm going to go over the technical themes and also the fundamental themes. Okay, so this is a pretty big day. It's a little tough right now trading, but as long as you follow with what I'm doing, you will be safe. Okay, so risk management is the #1 thing within the markets. Okay, so other than that, before we dive in, if you haven't already subscribed, please do. You can click on the TSE logo on the bottom right hand corner of this video. Also, like the video, leave a comment. If you have any questions, I'll be more than happy to help you. As you can tell, I'm not wearing a cap today, so you get to see my bald head, this shiny bald head of mine. So anyway, other than that, thank you for your support. And let's go ahead and dive in, because time is money, and that's what it all comes down to. So we're going to start off with the chart ARLO. Okay, thank you. Okay, so with ARLO, which is Arlo Technologies, this is in the technology sector and in the software industry. Of course, technology and software has been, technology sector has been great for the past week and a half. The softwares have been very strong. So there has been rotation within this sector and industry. Okay, so we are paying attention to that. So Arlo, we're going to go over the technical theme here, what's going on. So we do have this prior trend of greater than 25% from low to high. This is the primary base here, so that's how you look at that. Then also we look to see, well, what cycle are we in within the stock. Are we in the stage 1, stage 2, stage 3, or stage 4? And we are in a stage 2 accumulation uptrend. Right now, as you can tell, massive volume pumping into this stock here. Still huge demand all within this base. Okay, so next thing that we look at is we base count and look at the pattern within the base. Okay, so this count on the base is a secondary base with a rounding bottom right here happening. Okay, looks pretty good right here. We do have this downtrend line which was broken several days ago. Other than that, that's good on a technical theme as well. So as we're making this rounding bottom, we're going to look at the price. We're going to see what price action is and what's happening with price. So we do have low volatility within this area right here, meaning we do have price contraction. And not only that, as it's making this rounding bottom and moving up the right side, we still have price contraction all within here. Okay, that's good to see. Not only that, price is putting in work at the 200 and the 50-day moving averages. So it is, you do have demand coming off this 50-day moving average, which is good to see. Also this 200-day moving average, which is the red. As you can see, when it gets to that point, to that 200-day moving average, we do have buying that comes in. Now the other thing that we look for is, of course, see, we're not at or near 52-week highs. We're still about $3 off from 52-week highs. But I mean, that's okay. This is kind of you know, like I said, a rounding bottom, but it could get price moving on up here to around $8.85. If it can surpass that on some large demand, then we can possibly get up to that $10.49. Okay, but then we look at volume and we see what volume's doing. So volume is decreasing while forming this base right here and also forming the pattern. So we do have volume decrease or volume dry up within this rounding bottom. Okay, so what we need is we just need some volume to increase more while running up this right side here of this base or of this pattern. And that's really all we want to see. Okay, so that'll be good. And once we see some more volume, I mean, this did pop up on my on my proprietary scan, so there is good volume. It is surpassing that 50-day moving average. So the average volume over 50 days, it is surpassing that. That's good to see. Not only that, we do have volume dry up right here, so we are bursting out. And not only that, it is moving past that super pivot at $7.25, this purple line right here, this resistance line. Okay, that's good. Hopefully it'll close, it'll stay above that and close above that. If you want, wait until the close to see, or near the end of the day to see what's happening. You can look at an intraday chart. I usually don't look at intraday charts because sometimes they scare the hell out of me, and I'll jump the gun a little too fast and get out of a trade. So I try to be patient and let these trades work out just due to the volume, heavy volume and stuff like that, okay? So other than that, and price action, of course. So other than that, I'm taking a little bit of a different approach, and I'm putting in the risk management, showing you how you can manage your risk with this. So what I would do when I'm buying this stock, if I'm buying this stock, I'd place a stop 3 cents below the low of today at $6.98, okay? That's a 5.5% risk. So what you're looking for with that is you want your reward to be at least 2 to 3 times that. So you're looking anywhere between 11 to 16% for this stock. That's where you want to start taking some profit. And then what you can do is you can, as this stock moves up right here and kind of, it'll move up and kind of move down a little bit, and it'll move up. I don't know that that's what it'll do, but a good stock usually will. And that's how you do it. Kind of looks like a staircase right here like this. And you just can move your stop up each time to the low of that dip, and just place your stop up above that. So you can trail it. It's called a trailing stop, okay? Not only that, you can position size yourself even more as those dips are happening, and you buy more as it's moving out of those dips. You can add more to your position, okay? So other than that, that's practically progressive, what's called progressive exposure. It's like adding weights in the gym. So if you're looking to get stronger in the gym, what you're going to do is you're going to add weights. You're not going to decrease in weights, okay? That's logical, okay? That's logical. So other than that, Arlo looks pretty good right here. Let's move on to FINV. I have been pounding the table for this stock for the since last week. I mean, we did get huge volume. I mean, we've had nice volume, nice demand coming out right here out of this nice rounding bottom, which is in a secondary base as well. But other than that, I mean, I've hit on this stock right here. I've hit on this stock right here. I've hit on it right here. I mean, this stock is just moving. There's tons of volume, as you can tell right here on this day alone. I mean, over 80 million shares being bought at around let's say anywhere between $6 and $10. That's a lot of money being pumped into this stock, okay? So other than that, so what we're looking for, prior trend from low to high of the base. So prior trend was greater than 25%. We are in a stage 2 accumulation phase. As you can see right here, we do have tons of accumulation within this stock right here. We are looking, next we look at the base and the pattern. We are in a secondary base, this being more of your primary base right here. So moving into the secondary base, and the pattern it's forming is a rounding bottom. As you can see, it's running up this right side. That's what we look for. That's what you want to catch, okay, as the stock's moving up that right side of the base, okay? So there are points within there that you want to be buying, like at this $7.26 area. That is a super pivot. And of course, as you can see, once it breaches all that, and especially on higher volume increase or demand, you can see it just keeps running, okay? So other than that, we do have this rounding bottom, really nice. Now we look for the price. What is price action telling us within this base? Well, we do have low volatility, so price is contracting. We do have a nice tight price range right here between $7.26 and $5, okay? Then we break out, move up, and then we have another tight price action right here, okay? This is another tight price range, okay, from $8.70 to around $7.90. That's good to see, okay? So it is coiling. It coiled, breaks out, boom, starts moving up. Price does put in work right here on this 50-day moving average, so that is telling you right there that there is institutional buying. They are popping the stock up, okay? So that's good to see. Institutions are buying. That's where you want to be buying. You want to be buying with the institutions, okay? Not only that, today we are breaking out to the 52-week highs. I've been calling for that, okay? So you can go back and watch some of the videos. I can't really remember, but other than that, I mean, I have been calling for this stock, okay? And it's moving very nicely, okay? Other than that, then we go and look at volume. Let's see what volume is doing. Of course, we have volume dry up within this base and pattern in this rounding bottom in this secondary base. Nice volume dry up. And then we have big demand. We have large demand coming, forming on the right side of the base. Okay, so we do have heavy volume. So we are increasing while running up the right side of the base and breaking out of the 52-week highs. So we are increasing as we're breaking out of this out of the 52-week highs here. Okay, so that's good to see. So demand is soaking up that supply, getting past all that resistance, and it could possibly run from here. Don't know. I would probably say that this might pull back. I don't know, not for sure. It is a little ways from that 10-day moving average, which that can be a problem. But I mean, this could have a a huge day within the next few days or week or so. But other than that, just manage your risk appropriately and position size accordingly, of course. So 6, we're at the super pivot. The super pivots were breached at $7.26 and $8.78. So we were breached right here and then breached right here. So other than that, like I said, I've been calling for this stock and we've been moving nicely. Okay. Other than that, to manage your risk, place your stop 6 cents below the low of today, which would be at around $9.40. So place your stop around $9.40. That's going to be about a 6% risk from where you're buying right now. Okay, if you were to buy right now. So that's a pretty good stop right there. That's good risk management. Like I said, you want your reward anywhere between 2 to 3 times your risk. Okay, so wherever you place your stop, you want it 2 to 3 times that amount. Okay, so or that percentage amount. Okay, so you're looking anywhere from around 12 to 18% on reward. That's what you want. So other than that, like I said, if it pulls back, we might have a pullback tomorrow. This market did get a little rough yesterday, and going in today, I have seen a lot of breakouts and pullbacks. So meaning where the price will break out according to like 52-week highs or out of the resistance, and then it'll pull back in. So it'll just pull back in, and if you have too tight of a stop, well, you're going to get stopped out pretty quick. So you could get stopped out within a day or two, or even within minutes or hours, whatever, depending on where you place your stop. Okay. So other than that, let's move on. Let's get a move on. Let's go to RVLV, which is Revolve Group, consumer discretionary and in the specialty retailers industry. I've traded this stock, and I traded this stock back here in December, in early December. This I was trading in a primary base, and of course I caught it perfect timing. Okay, so it was around here, around $24 or so, and boom. I mean, yeah, as you can tell, ran up really well and kept running. But this stock is doing very nicely today. It's a high alpha name. We are breaking out on the relative strength line to 52-week highs, as well as the stock is making 52-week highs too. Okay, so that's great to see. That's what we do want to see. Okay, that's telling us this stock has some strength. Okay. The prior trend was greater than 25%. We are in a stage 2 uptrend. The base, the pattern, we are in a secondary base, this being your primary base, this being your secondary base. Okay, we are forming what's called a double bottom right here with a small handle happening right here. Okay, so next thing, price, we do have low volatility within this handle, and nice tight price action right here through the handle. And not only that, price works along the 20 and the 50-day moving averages. As you can tell, there is buying. Once this gets down to this 50-day moving average, buying comes back in. So we do have demand, boom, and then we hit down here. Although we did have what seems to be a lot of supply come into this right here. But as you can tell, it gets past that 50-day moving average, almost down to that 150-day moving average. But then it pops back up, and guess what? That price action is telling you that it's eating a lot of this supply right here, all this supply. So there is institutional buying within this stock. That's good to see. It bounces back after that deadly sell-off right there, boom, and we're back up to 52-week highs within a couple of weeks. So that's good to see. Other than that, we are breaking out to 52-week highs today. When we go look at volume, Volume decreases within the base and within this handle here. That's awesome to see. That's what we want to see. And then it is increasing while breaking out of the handle and into 52-week highs. So we are increasing in demand. There is demand today for this at this 52-week high at $60.89. Of course, we're at $61.64 as we speak of right now. Okay, so that's great to see. This is what we want to see. Other than that, the super pivot was breached at $59, which was right here. And of course pushes right past, boom, and it's moving. Okay, so risk management, how you're going to manage your risk is place the stop 3 cents below the low of today, and kind of messed up on this right here. So where you want to place it is right here, about 3 cents below that low and of today. That'll give you about, and that low is going to be at around, or that stop will be placed at $56.88. That gives you about a 7.5% risk if you take the trade right now. That's pretty good. And like I said, you want a 2 to 1 or 3 to 1 reward to risk ratio. So you're looking for anywhere between 15 to 25% in gains. That's what you want. Okay, so that's how you manage that. Position size accordingly as well. So just obey thy stops. Okay, just obey your stops. If you get stopped out, so what? There's going to be another trade around the corner. Okay, there's always opportunity knocking at the door within the stock market. Okay, that's the beauty of the stock market itself. There is always opportunity. And you just got to be patient, wait, and it'll come. Okay, it'll come. You just make trading effortlessly. Okay, it should be simple. It should be easy. You know, it is difficult trading. The process of itself, it is difficult. You know, it mentally will beat you up. It'll put you down. I mean, you'll be in a bad frame of mind just due to, you may have a string of losses, and you may become, in a bad frame of mind, and you don't want to do that. Okay, don't do that to yourself, because think positive. Say, look, okay, just because I got stopped out of this one trade doesn't mean that there's another trade around the corner, because there will be another trade around the corner. That's the beauty of the stock market. You just have to understand that the trades will come. Just let them. Don't force it. Don't force. No forced trades. Okay, don't do that to yourself, because then you're just wasting money, and you don't want to do that. Okay, so let's go ahead and get a move on to YTRA. I did buy this stock today. This has, I bought it around $2.58. It is holding where I did buy. So other than that, we are in a stage 2 uptrend. The prior trend was greater than 25% from low to high. The base and the pattern, we are in a primary base. This is a nice large primary base. It is important that when you are in a base, you look at the length of time. And the length of time has a lot to do with what's happening with the stock. And it's good to see a base developing kind of, within the 7-week frame to, more of the 20-week frame. Okay, so you're looking for like anywhere between a 2 to 4 or 5 month base, and this one of course has been in several months. Okay, and so anyway, so we're looking at price. We are putting in so within this base we're putting in the cup with handle pattern right here. Okay, so this is a cup with the handle right here, and there is nice tight price action, low volatility. It does put in work within, along this 200-day moving average and within the 50-day moving average. Okay, that's good to see. Not only that, price is near 52-week highs. So we're at, right now $2.59. The 52-week high is at $2.94. Okay, so hopefully we can run up to that $2.90. Just be prepared. This one could pull back here, could pull back. Hopefully it doesn't fill the gap if it does pull back. But other than that, we go and look at volume. Volume decreases within the base dramatically. Okay, as you can tell, there's heavy demand all around here. I mean, huge demand for this stock right now. But it does decrease right here. and it is increasing while we're breaking out of this handle here. Okay, so we do have an increase in demand, and we really do have a nice increase in demand today, moving this stock up higher, of course. So other than that, the super pivot was breached at $2.30, which that was breached yesterday, but the volume wasn't necessarily, I mean, it was good, but this didn't, as to what I know, it didn't pop up on my scan. Okay, so other than that, it is breaking out today. I did put on a trade with this stock. So other than that, how you're going to manage your risk is you're going to place your stop 5 cents below the low of today, so at around $2.40. That'll give you about a 7.5% risk. Okay, so you're looking for about a 15% to 25% gain within this stock. That's what you want. Okay, so other than that, I mean, if you want to measure up to the highs, up to the 52-week highs, if you were to buy right now, let's measure that up, and that's about a near 15% gain. So that's about a 2-to-1 reward to risk ratio, which that's pretty good. Okay, but I expect it to get a little bit more past that. Okay, I think, I don't know, we don't predict, so this isn't a prediction. And not only that, these stocks are not recommendations, and it's your duty to take responsibility for your own actions, because I'm not a financial advisor, I'm not a broker, I'm not here to promote these stocks or anything like that. I'm just here to show you how to trade and help you through your trading process and achieve super performance and make some serious money. I mean, that's what it's all about with the stock market. It's about making money, and you got to do it consistently. Okay, so other than that, let's go ahead and go through the fundamentals real quick. We're going to start off with Arlo. We are in the security and software group here. Other than that, it provides security cameras and cloud-based platform with a variety of connected devices. Its composite rating is 49, and it's not even ranked compared to its peers here, to its competitors. But other than that, it is in kind of a low industry group here. The relative strength of that industry group isn't so great, at a C. Earnings per share percent change last quarter was 91%. Be aware always of the earnings per share due date. Do not be buying into that, okay? Because it is too emotional. It's emotionally charged, and you can lose your ass, okay? And I'm serious about that. I know from experience when I first, started trading in options, and yeah, so it's a dangerous game. Don't do it. Not only that, we do have 3/4 of earnings per share acceleration. That's good to see. Consecutive years of annual earnings per share growth has been 1, which is okay. Sales percent change last quarter was 26%, so they did have an increase in sales. They don't have any debt, and that's good to see, according to IBD. So their product is selling. It has increased in sales at least, so that is a good thing to see. Not only that, we do have 7% change in funds owning the stock, and 3/4 of increasing fund ownership. So not only that, the accumulation distribution rating is a C+. So we do have institutions buying into this stock, okay, or maybe insiders, in the company, management or whatever, buying this stock. So that's great to see. That's what we do. We want to see that buying with those people, because you want to be buying along beside those. Okay, so just follow the money, buy with the money. Okay, that's how that goes. FINV, Finvolution. This is a China-based company that provides consumer financing services through online platforms. So it is kind of like a brokerage service here. But other than that, it is a composite rating at 92. It's not ranked within its competitors, but the composite rating is excellent. This industry group rank is 33, with a relative strength rating for the group is B. Excellent right here. Earnings per share percent change last quarter was 63%, with 37% of average earnings per share growth in the last 3 quarters. That's excellent to see. That's what we want to see. Not only that, 5/4 of earnings per share acceleration. So this one is accelerated within its earnings per share 5/4. Okay, that's awesome to see. That's great. Other than that, Their annual pre-tax margin is 32%. Annual return on equity is 23.8%. So they are creating profits for the company, and they're keeping those profits. That's good to see. The SMR rating is at an A. So the sales margin, return on equity, it's good to see. Okay. Not only that, we do have a 23% change in funds owning the stock. So we do have a 23% change within the institutions and hedge funds owning the stock. Okay. So there is demand coming in the stock, and there is 3/4 of increasing fund ownership. Okay, so that's great to see. Also, the accumulation distribution rating is A, so there is accumulation within this stock. Okay, next thing that we're going to look at is RVLV. We are at a composite rating of 99. We are in the retail apparel, shoes, or whatever right there. So it operates as a fashion retailer for millennial and Generation Z consumers. It is ranked number 3 within its competitors, and this industry group rank is 15. So we're in a very strong industry group right here with a very strong relative strength rating for the group industry itself. Now let's go look at the earnings. The earnings per share percent change was 400% last quarter, with 208% average earnings per share growth rate for the last 3 quarters. That's excellent to see. That's what we want to see with this. It is moving. They have been having great financials. Apparently, they're coming out with great earnings reports. Okay, so they're beating expectations and analyst expectations, and they're moving. Okay, so we do have 4 quarters of earnings per share acceleration. That's awesome. Other than that, let's see here. So the 3 years earnings per share growth rate has been 60%. So it's been increasing 60%, and that's awesome, with 4 consecutive years of annual earnings per share growth. Okay, these guys are doing really well. Okay, they're defeating each time they come out with earnings, with their earnings report. I mean, they're making some money. They're doing something right. Okay, management's doing something right. The company's doing something right. You know, they're selling some product here. 22% sales percent change in the last quarter. Not only that, the annual return on equity has been 34.3%. That's good. Okay, so great stock right here. Not only that, we had a 30% change in funds owning the stock. Okay, we do have institutions buying here. We do have decent accumulation. So not only that, 4 quarters of increasing fund ownership. So we are increasing in the funds. I mean, they are buying more and more. Okay, so like I said, this is in a secondary base. You want to see these things. Okay, this is what makes a breadwinner right here. Okay, this is good. It's good to see. Now let's move on to the last one, which is YTRA. And I'm not really a fan of the fundamentals on this stock, but I like what it's doing today. I like the gap up, and I like the strength that it's showing within the price. This company is an India-based company that provides airline, bus, and rail tickets, hotel bookings, and holiday packages. Other than that, it is in a decent industry group rank at 97. And the relative strength rating for the group is a B-, which is okay, not bad. Other than that, the earnings per share sucks. It's not great. The sales, not great. Debt to equity, 32.5%. Okay, maybe that's okay, but other than that, I don't care for that. But there has been an 8% change in funds owning the stock, with 2 quarters of increasing fund ownership. So that's interesting. We do have institutions buying. They are accumulating within this stock because the accumulation distribution rating is a B-. So yeah, I mean, that's good to see. I mean, I think it is. That's where I want to be buying, is I want to be buying with these funds. Okay, so other than that, when you're trading, like I said, just obey your stops. Okay, risk management is the name of the game. This is how you win. This is how you make consistent profits, and you just follow the process of trading. You'll be okay. Okay, follow that money, and that money will tell you a lot. Okay, so but before I end the video, I want to thank you for watching and supporting the Speculator's Edge. I hope you found the material enjoyable. Also, I'm trying to be a little bit more, energetic about things. Today, like I said, today is a little bit rough in the markets. I've gotten stopped out of a couple of positions, but oh well. There's another trade around the corner. So what? And it's just part of trading. Don't let it get to your psychology or into your head. Okay, it's a mental game. It's emotional. I mean, it's spiritual. It's physical. I mean, just don't let it beat you up, okay? And then keep a warrior's mind, you know. Not only that, you know, watch some comedy. Keep yourself entertained, you know. Laugh, you know. Smile, you know. Do positive things today. Just be you and just be happy, you know. And just know that there's an opportunity around the corner. There's always opportunities waiting. Opportunity, it's not a lengthy visitor, but when it's there and knocking, you best take it, okay? And that's what we're about here at TSC. We find those opportunities every day, okay? And that's the great thing about what I can show you, what I can give you, is that opportunity to change your life. I mean, to make your dreams a reality, you know, where you don't have to work that 9-to-5 job, you know, or you want to retire early. You know, that's what it's about. So, you know, as long as you follow the process and just, you know, listen to what I'm saying, you know, just you follow it and you're going to be making some money, okay? It's going to be consistent. Yeah, you may have losers here and there, but oh well, what's life? You're going to win some, you're going to lose some. Oh well, it all depends on how you handle it, and handle it appropriately, you know? Keep your emotions intact. So don't cry about it. Be a good sport. Keep that attitude good, okay? Other than that, please subscribe if you haven't already. Drop a comment. Let me know what you think of the video. Like it. You know, if you have any questions, ask. I'll be more than happy to help you. But other than that, I'll post a link down below of this video for my Patreon site. Go check it out. Man, please subscribe to one of my tiers, you know. Other than that, thank you again for watching. Here at TSC, we trade in the present, study the past for knowledge, and follow the process of trading to build our future, okay? So thank you again, and opportunities awaits, my friend.